Hey guys, what is going on? Welcome to the video. So in this video, we're going to be going over my top 3 stocks for this upcoming week, my plays, my thesis on each trade, and everything like that. We're also going to be reviewing last week's picks, how they performed, and the updated thesis on those. Alright, so let's go ahead and take a look at last week's picks. The first pick from last week is Palantir Technologies, ticker symbol PLTR. We talked about the breakout formation out of the wedge that was forming, and we ended up getting that breakout early in the week, and we closed the week up 5% on this position. So very solid week for Palantir. The next trade was Switchback Energy Corp, ticker symbol SBE. This can be the merger with ChargePoint. We called out the ascending triangle formation, up 28% this week. We broke out of that ascending triangle, broke out of both resistance lines, and hit a high of almost $50. So very successful trade, up almost 30% this week on SBE. Next up, we had BigCommerce, ticker symbol BIGC. This gave us some pretty good buying opportunities. It's still sitting right at support, but this is a multi-week trade, not just a quick trade. And what we got here is I believe that this is fixing to break out. As we can see, it's in a descending triangle formation right now. But we talked about once it does break out of this descending triangle, if it can break that trend line, the downtrending resistance line, I think the stock can run very, very quickly to $80 plus. It is heavily shorted, so I do think we will get a squeeze when and if it does break out. Obviously, the stop loss is under that support line. Next up, we had Facebook, ticker symbol FB. This was down for the week. We talked about this wedge formation as well. We did not get that breakout. We got the breakdown for this one, but the stock is still holding support at 265. So the stop loss for this position would be if it breaks below 265. In that scenario, it would have more downside, but if it can reverse off this 265 level, I do think we could get a pretty solid bounce back and potentially get back into a breakout formation. But as of now, it is a losing position, and the stop loss is under 265 if that was to happen. So a pretty solid week last week. We had 2 winning positions, 1 position that has not played out yet, and 1 losing position in Facebook. So last week was a very volatile week all around. It was a 3.5-day week with the Christmas holiday and everything. It was also a very low volume week, 60% of normal volume. So essentially every move that the market made was accelerated because of the lower volume. Each buy order meant more and each sell order meant more. So for that reason, that's why we got the volatility. Also, the new strands of COVID, as we know, that caused the big drop on Monday and Tuesday. So overall, the market is still pretty hot. It's holding the uptrend. But we definitely do have to always manage risk going into the new year. So my personal plan is still respecting all of the stop losses that I have. Also playing within the hot sector, which the biggest hot sector right now is, I would say, the SPAC sector. So playing a lot of SPACs. Also with the positions that I'm getting into, I'm making sure that the reward is at least 3 times more than the risk. Alright, so now we can take a look at this week's top stocks that I'm playing for this week. Let's get into it. So the first stock that I'm going to be talking about in this video is Consolidated Edison, ticker symbol ED. So this is a reversal play. So we can take a look at the chart. This is the yearly chart, and we can see that it's holding long-term support right now. It has hit the support level 3 times in the past, and right now sitting at the support level once again. So holding the support level right at $69 to $70. Now my stop loss in this position, if it drops below, would probably be right at $68.50 if it was to drop below. But taking a look, we can zoom in that it is starting the reversal trend after selling off massively. And I do think we get this reversal and start the bounce back. And the play that I like so much with this position is the fact that the implied volatility is so low. So taking a look at Robinhood, because it does have the easiest view on the implied volatility and the Greeks and everything like that, we can see that the implied volatility is in the low 20% in these options. So what does this mean? This means that the option premiums are super cheap. So my plan on this is I like the late January calls. I've personally been starting to buy the January 29th calls. If you're looking for a safer play, I would go with in the money, which would be that $70 strike price. And if you're going with more risky, I personally like the $73.50 calls a lot, and anywhere higher it could be reasonable as well. Just that premiums are super cheap. So for example, we can take a look at this $73.50 call. We can see that we're paying 80-cent premium to buy these options. So let's say a hypothetical scenario, let's say ED bounces back, it gets to $75, which would be a conservative estimate if this stock is to bounce back. So $73.50, we can add 80 cents onto that. So 80 cents onto that would be $74.30. So $74.30 would be your break even. Now every 80-cent increment this stock goes up after that, you're doubling your money. So for example, if this stock gets up to $75.10, that would be a 2x of your money. Let's say $75.90, that would be a 3x of your money. Now every strike price that you go higher than this, the faster your money will multiply, but also harder to get in the money and reach that strike price. So overall, this is just a very cheap option play. And I do think that 200, 300, 400% upside is there. If this reversal does play out, it has a clear stop loss area under the support. And the fact that the support level has held 3 times over the past year, I just think this is overall very, very safe play, very cheap options, and I love the risk reward for the late January call options. Alright, so that's the first stock pick, ticker symbol ED. Let's go ahead and get to the next pick. So the next stock I'm going to be talking about is TherapeuticsMD Incorporated, ticker symbol TXMD. So taking a look at the technical chart, we can take a look that this is also a longer term support play, as it has held this support multiple times and it is consolidating right at the support. So the support level that I'm looking at is $1.15. As of right now, it's sitting at $1.19. So the stop loss in this position would be at $1.14. And the reason that this stock has taken the big dip recently is because they did have an offering, but the offering is closed. It closed a little bit over a month ago, so that offering is out of the way. And what I like the most about this stock is the massive short float of 29%. Also, 266 million shares out of the 272 million shares are public float. So what does that mean? Almost 30% of the entire company's shares are shorted right now. So if this stock does break out of this trend, I think this stock does end up seeing a massive short squeeze and being a very small market cap under $500 million. This stock is going to move very, very quickly when shorts are forced to cover if the stock does break out. So the breakout area that I'm looking at is if it breaks out of $1.25, I think we see the big breakout, potentially up to $1.50, $2 within that range, depending on how quick shorts will have to cover. And the stop loss area is pretty clear, right under 115. So just 5-cent downside, which would be 4% or so, up to 50% upside, 50% plus upside if this breakout does play out and the short squeeze does play out. So overall, this is a short squeeze, a breakout play, low float, so it is going to be a very quick runner if the breakout does play out. It's a lower float, higher risk, but if you do have that clear stop loss in, that's where you can reduce your risk and just have that great risk reward ratio. So that's my plan on that one. A recent short squeeze that we saw on one of my callouts, this was 2 weeks ago, DMTK. This has had a massive short squeeze, breaking out of that wedge and now sitting in the mid-20s after calling the stock out right at $11. So over 100% gain. Could we see another one of these in TXMD? Potentially. I do think there's a chance that we see a massive breakout with TXMD. Alright, so next up we're going to be talking about a couple of SPACs. I'm looking to increase my position pretty heavily this coming week. SPACs are the overall hot sector right now, and I do think with some of these catalysts coming up with these SPACs, I think we could see some big moves coming soon. So the first SPAC that I'm looking to add pretty heavy this week is BFT. This can be the merger with Paysafe. So what is Paysafe? I like to think of Paysafe as kind of the Europe version of PayPal. They're number 2 in global stored value digital wallet. They're number 1 in iGaming eCash network, which is my favorite metric that this company has, the iGaming, which is a huge growing space. And they're also the number 4 independent merchant acquirer in the US. They're also expecting massive growth within their digital wallets, their eCash, and their integrated processing. And overall, I do think this company will be trading at a premium. I do think when the merger does get announced, this stock is going to take off. And I could see $20 plus pretty easily as an easy target, and $30 to $40. I think this is more than reasonable for this stock to reach that level. So I think this stock is a very good buy under $18 per share. And when we do get that merger vote date announcement, I think that's where we see $25 plus and potentially up to $30 to $40 within that range if things go right and if the SPAC sector does stay hot. So next up, a SPAC that I called out in a past video, jikh. This is the big e-health provider. I think this stock is still very undervalued. The risk reward is great, and I do think this SPAC has a lot further to run. IPOC finally got a ton of hype last week. This is one that I've been liking for a while. So IPOC, I think this is a pretty safe bet to reach $20 plus as well at the beginning of January when they are expected to have their merger vote date. And I do think we could see $25 plus around that range when the stock does merge. And one more that I'm looking to build into a pretty good sized position is IPOF. This is by the same guy who's behind so many of these SPACs, Chamath, however you say the name. This guy's a genius. This is his largest market cap SPAC, IPOF, and it's also trading the cheapest right now. Now currently they do not have a target, but when they do get a target, we can expect this to take off depending what the target is. But overall, just being his largest SPAC, this means this would potentially get the largest acquisition that he's looking for. And also is trading the cheapest out of his newer SPACs, including IPOE and IPOD. So overall, this is just trading the cheapest, best risk reward ratio out of these. This is a pretty safe bet. With that $10 floor worst case scenario, I like the risk reward here. Alright, so those are my top stocks for this coming week. Let me know your thoughts down below and what stocks you're playing this upcoming week. If you want to join the private stock group, that link is down below as well. Every time I buy and sell a stock, I send an alert, I send a watch list every single night, I answer any questions you have, and also you can chat with any other group members about any stock, any research, anything like that. Also, if you want to get 4 free stocks on Webull, that is expected to end December 31st. So if you have not gotten that, I highly recommend you get that now. So 4 free stocks on Webull, $5 free in Acorn investing is also down below, and $10 free on Coinbase and Bitcoin. You can't go wrong with that free money. Those are affiliate links, so it does help support the channel, and I would greatly appreciate that. Subscribe if you haven't already, like the video, it does help me out a lot. Good luck to everybody this week. Make sure to trade safe, trade smart, and let's make some money this week. Let's get rich.